Hey, what's up, stock compounders? Brad here. So today I'm going to talk about Chris Meyer, the author of 100 Baggers, stocks that return 100 to 1 and how to find them. So I think there are very few people who have spent as much time thinking about the anatomy of a multi-bagger stock than Chris Meyer. So I was reading one of his blog posts today, which this is a fantastic resource. You guys should all check out Woodlock House Family Capital. Every month, maybe one or two blog posts will be put out by Chris. And I was reading through this, and I noticed there were a few mentions in here of stocks that he owns. Okay, he says right here, here's two charts. The bottom is Constellation Software, which I own in the fund. So in this latest blog post, he actually mentions 4 companies that he owns in Woodlock House Family Capital. So that kind of got me intrigued. It got me wondering, I wonder if I could figure out everything that Chris Meyer owns in his fund. I did this, I think, a year or two ago, where I compiled a list of, I think, 11 companies, and I posted them. Chris was like, you've got 9 out of the 11, okay? This time, I think I have all 10 out of the 10 that he currently owns. So the way I got these is by looking through a few of the more recent blog posts and on Twitter. So Chris shares, a lot of great resources that he's coming across. He discloses when he owns particular companies that he's talking about. So I went through like the last year of Chris Meyer's tweets. Didn't take all that long. He doesn't tweet that often. And I think I was able to compile a list of all 10 companies that he's invested in. So let's take a look at those. Oh, just for the record, Chris doesn't have to disclose what he owns because he doesn't manage a fund that's over 100 million. He doesn't have to file 13 Fs. So the only way we can find out what he owns is if he mentions in a tweet or in a blog post that he owns these things. So this is the list I put together of companies that he owns. And I just think it could be interesting to get a sense, where is he looking? What size companies is he looking at? What industries are they in? And then I did a little math here to look at the 2 engines of shareholder returns: earnings growth and multiple expansion or contraction. And I added one more, share buybacks. So we're going to compare that math to the actual performance of these companies over the last 10 years, where there was 10 years worth of data. In some cases, there weren't that many years, so I had to kind of shorten those durations. But let's get a little feel for what he owns. And this is in order of when he mentions it. These top 4 were all mentioned in his most recent blog post. And then I went through the tweets going back in time to fill out the list here. Now, to be honest, Domino's Pizza Group, this is the one I'm least confident about. He hasn't mentioned this for over a year on Twitter. So I'm not sure about this one. I'm pretty confident about the top 9. Kind of iffy on this last one. So let's go through Constellation Software, obviously a software company out of Canada. Just incredible returns for Constellation Software. I think it's done something like doubled every other year for the last decade. Okay, incredible returns to shareholders for Constellation Software. Mark Leonard, the CEO, is kind of setting the gold standard for employee incentives. Okay, I think share-based compensation is virtually non-existent at Constellation. So he's really figured out how to set up those incentives. HEICO Corp in the aerospace and defense industry. I believe this company is like a serial acquirer. That's a common theme that we're going to notice through several of these investments from Chris Meyer, being serial acquirers. Brown and Brown is an insurance company in the U.S. Old Dominion Freight Line, a trucking company in the U.S. Lifeco and Technion, okay, are both serial acquirers out of Sweden. Okay, you've got Copart, which it sounds like they work with auto insurance companies. When a car gets in an accident, Copart will purchase that car from the insurance company and then get what they can for the parts. Basically a salvage operation. Topicus was a spin-off of Constellation Software. I think that's how it ended up in the portfolio. It wasn't that Chris bought Topicus shares outright, but because he owned Constellation, those Topicus shares appeared in his portfolio. Now, I don't know, he may have added to Topicus after it was spun out. I'm just not sure about that. So, Evolution, I believe Evolution deals in online gambling, also based out of Sweden. And then the last one is Domino's. Now, this is not the Domino's in the U.S. This is the Domino's in the U.K., okay, the United Kingdom. And I'm pretty sure they have locations, outside of the UK as well, but kind of in that general vicinity. So let's look at, just take a look at the industries and notice there's a lot of different industries that are covered here. There's only 2 repeat industries, and that's Constellation and Topicus, which, as I said before, there was a spin-off of Topicus, so that makes sense that those would be in the same industry. And then the hotels, restaurants, and leisure, right? So you've got Evolution, which is really in the, leisure gaming sector, and then Domino's, which would be restaurants. So quite varied in, the scope of different industries here, where Chris has investments. Let's look at the market cap real quick. So in his book, Chris Meyer really made a point of saying, if you're going to find a 100 bagger, you're probably going to need to start relatively small, okay? Probably sub 1 billion market cap. So, I read that and I thought, okay, that makes sense. And then you look at Chris Meyer's portfolio and it doesn't really line up, right? There's only one company in here that's sub 1 billion, okay? Now, some of these have grown since Chris Meyer bought them, but I think his fund started in 2019, okay? So it's not like it's been compounding for many years, okay? So I think the starting market cap for when he got into a lot of these probably aren't too different from where they are today. But I want to share a recent tweet from Chris Meyer. I think this is the one. Yes. What Chris Meyer would change if he rewrote 100 baggers. Okay. This gets to something I would do differently if I wrote my book again today. In the book, I write you should favor smaller companies, and I recommend staying under 1 billion in market cap. I based that on the study itself, which showed that the median sales for 100 baggers when they started their journey was 170 million. They were small, not tiny, but small. I wouldn't write that today. It's obvious you can't expect to buy Apple, right, one of the biggest companies in the world, today and get a 100 bagger. Size plays into the mix, but I'd be less dogmatic about it. And that shows up in his current portfolio. Yes, you should prefer smaller companies, but the more important factor is to focus on the rate at which the business compounds its capital, right? So I wanted to bring that into the conversation here as we look at the market caps of his current holdings. Because there's 6 large caps. Okay, Constellation, Heiko, Brown and Brown, Old Dominion, Copart, and Evolution are all kind of in the large cap territory. 2 mid caps, Lifeco is kind of on the upper end of mid cap. I consider mid cap around 2 to 10 billion. And then Topicus, which would be squarely kind of in the middle of the mid cap size. And then 2 small caps. You've got Technion, which could even be considered a micro cap. Okay, I think a lot of investors think of small cap, micro cap cutoff is around 300 million. So flirting with micro cap size there. And then Domino's Pizza Group out of the UK is a small cap as well, under 2 billion. So mostly large caps, which is consistent with his latest kind of stance on, where you might want to look, where you might want to hunt for these 100 baggers. Location-wise, really, there's 2 in Canada, but really just this one, Constellation Software, again, the spin-off from Topicus. 4 of them, 4 out of 10 in the US, 3 in Sweden. So a very strong showing for Sweden with Lifeco, Technion, and Evolution. And then just 1 across the pond from me in the United Kingdom. Now let's take a quick peek at what's driven the returns for these companies over the last decade. Earnings growth. For example, with Constellation, earnings has grown almost 10 times in the last decade. Multiple change and buybacks. So what I did to get the combined, which should be a pretty close approximation of what shareholders got from an investment over the last decade, is this 16.5x multiple. So you can see most of these companies had pretty impressive earnings growth. Earnings growth of 4 times is 15% a year. Okay, you're doubling in 5 years. So by the rule of 72, if you double in 5 years, you take 72 divided by 5, you get about 15%. So Constellation is off the charts at, tenfold increase in earnings. Evolution, there is no chart for Evolution. That's beyond off the chart at 100 times earnings from 10 years ago. That's just insane. I would say Domino's is kind of the laggard here, just doubling earnings over the last 10 years. And then Topicus and Technion, they haven't been around long enough to go back 10 years to see what the earnings change was, because there were no earnings 10 years ago. Multiple change is basically what are investors today willing to pay for $1 of earnings, okay, as compared to what they would pay 10 years ago. So there's been multiple expansion in Constellation, Heiko, Brown and Brown, Old Dominion, Lifeco, Copart. Basically, every company in Chris's portfolio that's been around for a decade has had multiple expansion, except Domino's Pizza. Just a slight contraction. I think the EV to EBIT ratio went from 19 to 17 for Domino's Pizza Group out of UK. Share buybacks. So buybacks were not a significant driver for investor returns in these companies over the last decade. More buybacks than dilution, right? You've got some buybacks at Old Dominion, Copart, and Domino's. A little dilution with Hyco, but not a big factor for shareholder returns in these companies as of late. So here, you've got the combined performance from these three factors as a good approximation for how much shareholders would have seen in terms of returns, price appreciation in these companies. Now, the reason there's a difference here between the actual 10-year performance and the combination of these three factors was primarily the exchange rate from Canadian dollars to US dollars. So slightly less if you're looking in US dollars, which I did use US dollars for the 10-year performance. So there's going to be some differences because of that for these companies that aren't based in the US. But yeah, 10-year performance, 13 times. That's incredible. It's going to be tough to beat that. There aren't many companies that did better than that over the last 10 years. Hyco 10x, again, that's 26% per year compounded for a decade. 4x, 15% annualized returns, that's very solid. 14x, wow, that's even better than Constellation Software. Old Dominion has just crushed it over the last 10 years. But keep in mind, it's also had the strongest multiple expansion of any of these companies. So, could be a little frothy. You want to pay attention to that if you're considering investing in Old Dominion. This price to earnings or EV to EBIT multiple, could be pretty high. May be worth waiting for a pullback there. Lifeco, 6x in 8 years. Again, outstanding. Just so you know, a 6x in 8 years is a lot more impressive than a 6x in 10 years. And I'll get a little bit into thinking about the math of that, just doing the numbers in your head. Now, 4x in 4 years, again, that's incredible. Technion over the last 4 years. 8x, can't complain about that. 1.3x in 2 years, that's a 30% increase in 2 years. Chris pointed out Topicus has beaten the market, beaten the S&P over the last couple of years. So again, it's a very short time frame to be looking at these multiples for Topicus. Evolution of 50x in 8 years, are you kidding me? That's just unheard of. And then here's the laggard, Domino's Pizza, 1.1. So a 10% return. I think it's 8% return over the last decade. Okay, that's not per year, that's the full decade. So it'd be very interesting to hear, what Chris sees in Domino's Pizza. Again, I have the least confidence that this is actually in his current portfolio. But it would be fascinating to hear, what is his variant perception on this particular investment, given that there's just no history of performance with Domino's, the UK version. So, this is what I think Chris Meyer's portfolio looks like. Maybe we'll have some 100 baggers in here. Clearly, that's something that motivates him. And I'm definitely curious to hear from you guys what you think of this portfolio. But real quick, I wanted to point out that tweet just to kind of rewire your brain a little bit. It's so easy to think linearly, right? We're really trained as humans to think linearly. So here's the tweak to think more along the lines of compounding. After the first decade of compounding at 20% per year, you're up 6 times. Okay, it's actually 6.2 if you want to get specific, which seems a long way from 100x, even though you're about 40% of the way through in terms of years. Okay, so if you continue that pace, compounding at 20% per year, after 10 years, you're at 6x. After 20 years, I think you're just about at 100x. Okay, according to this 40%, it would take a little bit longer than that. 25 years, I think, is what it would take. So, you may look at, for example, let's pull this up. 4x in 4 years. Okay, you might think, well, it's just a 4x. Well, I mean, if you continue at anywhere near this pace, that's going to be 100 bagger very quickly. Okay, and I can't do the math in my head right now. Well, maybe I can. Let's see. So a 4x in 4 years, that's an 8x in 8 years, a 16x in 12 years, a 32x in 16 years, a 64x in 20 years, and you've got over 100 bagger by 24 years. Maybe that's right. I don't know. I probably should have prepped more. But you've got to think about doubling every time period. Okay. Yeah, maybe that's right. I should practice my mental compounding. But that's about it, guys. I just wanted to reveal Chris Meyer's, hopefully, 100 bagger portfolio. It'd be great if all of these became 100 baggers. That would really be a testament to the work that he's put in. Of course, it'd be great if even 2 or 3 of them became 100 baggers. That would, make him wealthy beyond, any personal needs. So hopefully that was interesting to you. And I will see you all in the next one. Take care.